Thank you for joining me for today's episode of Are There Really That Many Retailers? I'm Alex and I'd like to talk to you about Macy's today. So, Macy's is a physical retailer. They're in most malls, or rather, they're in a lot of malls. And that's kind of the problem. The whole mall business has been going down steadily ever since Amazon gained so much market share. So, there's actually a lot of malls closing. And the ones that remain don't have as much foot traffic as they used to, because why do you drive to malls if you can get literally everything from literally any store inside the mall from Amazon? So I don't believe that the whole mall thing is going to end anytime soon, and so I don't think that Macy's is just doomed to fail sooner or later. I think that Amazon has gained a lot of market share, but I think that what remains in the retail space is likely to continue for quite a while because some people just don't like ordering stuff from Amazon. And Amazon, for the longest time, had the great advantage of no customer has had bad experiences with Amazon because they had no experiences with Amazon. And at this point, we're at a point where pretty much everyone I know has had bad experiences with Amazon where stuff doesn't show up at all, doesn't show up on time, gets there damaged, and all kinds of stuff. So I think that we're finally getting to a point where the whole market share gain at the cost of all the physical retailers has come to an end. And what remains is a lot of consolidation where the weaker businesses die and the stronger remain and gain market share. The reason I wanted to talk to about Macy's today is because when they came out with the quarterly earnings, their stock went down significantly and has continued to decline. But the outlook is not actually that bad. So they predict a flat to plus 1% comp sales. With the current tariff situation and everything else that's going on is actually not that bad. So that's why I wanted to have a look at Macy's and see how bad they're really doing. So the price right now is $14.39, which is down over 50% from a year ago. And the PE is under 5, which is amazing. It's hard to see a stock that's this cheap. The dividend yield is 10%, again, because the stock is down this much. It's not because they raised the dividend to insane highs. The payout ratio is 46%, which is not terrible, and that leaves them with almost 55% of their income to invest, to grow, to kind of keep their market share and try to, not just keep their market share, keep their revenue, gain market share. So payout ratio 46% is obviously really good. And so revenue is down 0.5% to $25-ish billion, which again is not terrible considering the tariff situation and everything that's going on in the mall space right now. Earnings 1.1 billion, which is down 30%. They were up to about 1.6 billion the previous year. These are all year-over-year numbers. So again, not great, but also not terrible. A lot of other businesses have had their earnings increase by up to 100% because of the tax situation. The massive tax cuts given to businesses obviously caused their after-tax earnings to spike significantly. But minus 30%, again, is not terrible. Little restructuring and, it'll go back up. Total assets $19 billion, total liabilities $12.7 billion, and net tangible assets of $1.4 billion. Net tangible assets actually up 100%, which is obviously amazing. The reason that everything is looking so grim right now is that the quarterly numbers were worse than expected. The outlook is worse than expected, but I don't think that all of this combined justifies the price of 4.38 PE. So to put it all together, the one thing that Buffett is putting above all else is safety of principle. And that is what we need to take into account here to weigh against all the other things. All the other things meaning amazing PE, amazing dividend yield, reasonable balance sheet, not really enough going against Macy's right now for us not to consider this stock at this amazing price. Again, this is a stock that's on sale, and it's on fire sale. So the fear is obviously there that they go the way of JCPenney, but with the outlook they've given and with the numbers they've posted, I don't see that happening short term, and JCPenney has made so many other mistakes that kind of led them down to the path they're on. So I don't think that Macy's is making the same mistakes. I don't think Macy's is going downhill the way that investors apparently think they are. When they reported the quarterly earnings, the stock dropped 10%. They've kind of been on a decline since then. Obviously, there have been Trump tweets escalating the trade war, so that's kind of to be expected. The whole market is down since then as well. But let me sum it up. You obviously need to take the safety of principle into account, and you need to look into Macy's, their long-term outlook, and what you think is going to happen to them over the next 3 to 5 years. If you don't think that malls as such are going to be around, then Macy's is not going to be around. If you don't believe in the whole physical retail space, I don't think that you think Macy's is going to be around. So I don't think that you should be investing in Macy's anyway. For me, it's hard to ignore a stock with a PE of under 5 that still posted profits, that are still paying dividends, that are still having reasonable balance sheets, reasonable outlook. So I think that I will be investing in this stock, but I will not make it a huge position. I will just, I will open a position and I will make it one of my smaller positions because the upside is pretty big. A PE of under 5 means they can basically quadruple in price without going over a reasonable PE for a value investor. So I think that there's a huge upside to Macy's short and medium term. And I think that in the long term, they can do a lot of things to get back on track, grow their business again, and post reasonably good earnings and revenues. So I will be investing in Macy's over the next few days, and I think you should probably consider this stock. Obviously, as a growth investor, not the stock for you, but dividend is amazing. PE is amazing, so value investor, dividend investor, definitely look into the stock. That's it for me for today. If you like this video and you haven't already, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.